Yes, students, our today's first topic is partnership deed. What is partnership deed? It's a small, short type question. The meaning of partnership deed. Now, we know that it is essential that there must be some terms and conditions agreed upon by all the partner when they entered into a partnership business. Such term and condition may be either oral or written. The law does not make it compulsory to have a written agreement or a oral agreement. Depend upon the partners that which type of agreement they will maintain. It is in oral or written. But in order to avoid all misunderstanding and dispute in future, that it is always best to have a written agreement, and the written agreement between all partner which has all type of term and condition known as partnership deed. The written agreement the term of contain the term of partnership, like name of firm, address of firm, name of partners, type of business. These type of term and condition in written known as partnership deed. So, mean of partnership deed is a very short type question. Mean of partnership deed. Partnership deed is a written agreement which contain the term of partnership like name of firm, address of firm, name of partners, and type of business, etc., etc. Okay, this is the mean of partnership deed. But if any partnership firm does not have any partnership deed, in which case, then if firm does not have any partnership deed, some rules are applicable on the partnership firm. In case of without partnership deed, the following rule will be applicable on the partnership firm. Let's see it with an example. अगर आप अपनी लाइफ में कुछ रूल्स एंड रेगुलेशन लेके चलते हैं, आप अपने रूल एंड रेगुलेशन को फॉलो करते हैं और आप उसको एकदम स्ट्रिक्टली फॉलो करें ना, मतलब सुबह उठने के टाइम से लेके रात को सोने के टाइम तक सब कुछ बहुत ही सिस्टमेटिकली आपने काम सेट कर रखा है, तो ऐसी कंडीशन में आपके पार्टनर्स आपकी लाइफ में कोई भी इंटरफेयर नहीं करेंगे, बिकॉज दे नो दैट हर चाइल्ड इज गोइंग ऑन ए राइट वे। उनका बच्चा एक सही रास्ते पर चल रहा है तो वो क्यों इंटरफेयर करेंगे। बट ऑन द अदर हैंड एक दूसरा सीन भी है। अगर आपने अपनी लाइफ का कोई भी रूल एंड रेगुलेशन, कोई भी पैटर्न सेट नहीं कर रखा है तो क्या होगा, तो ये होगा कि आपको फिर अपनी फैमिली के कुछ जो अपनी फैमिली आपकी फैमिली ने जो रूल एंड रेगुलेशन बना रखे हैं आपके घर पे, वो आपको फॉलो करने ही पड़ेंगे। एंड दिस इज मस्ट फॉर यू। आप उसे अवॉइड नहीं कर सकते कि मैं तो मेरे हिसाब से चलूँगा। आप अपने रूल्स एंड रेगुलेशन बनाओ, उनके हिसाब से चलो तो बहुत अच्छी बात है। अगर आप अपने रूल्स एंड रेगुलेशन बना के चलते हो देन इट्स योर डीड, इट इज़ डीड कि आपने अपने रूल रेगुलेशन बना रखे हैं और आप उनको फॉलो कर भी रहे हैं स्ट्रिक्टली। बट इन एब्सेंस ऑफ डीड, if there is no regulation rule and regulation in your life, then what will be in this condition, your family applies some rules and regulation on you। आपका परिवार आप पे कुछ रूल एंड रेगुलेशन ऑटोमेटिक क्या कर देगा, लगा देगा, और वो रूल आपको फॉलो करने ही पड़ेंगे। सेम एज इट इज़ एक फर्म भी अगर अपना पार्टनरशिप डीड नहीं बनाती है देन सम रूल्स आर एप्लीकेबल ऑन द फर्म according to Partnership Act 1932, and these rules are as follow. Number 1, P and L. P and L are to be shared equally. If there is no partnership deed, then profit or loss at the end of year which will be divided in partners equally. If you have deed, अगर आपके पास deed है and there is a P and L ratio, then okay, you can divide your profit into your P and L ratio. But if absence of deed, then profit share will be equal between all partners. Number next, no interest on capital to be allowed any partner. Generally, a partner invests capital in the firm and he will get interest from firm on capital. But If there is a no deed, then no interest shall be allowed to any partner. Interest on capital is not allowed. Next, no interest on drawing to be charged. If a partner withdraw drawing, if a partner drawing some amount from firm, then firm charged interest on drawing from him. But in absence of deed, no interest on drawing to be charged. हम किसी टाइप का इंटरेस्ट नहीं ले सकते क्योंकि हमने डीड ही नहीं बना रखा. बस इंटरेस्ट ऑन कैपिटल दे नहीं रहे और इंटरेस्ट ऑन ड्राइंग ले नहीं रहे इन एब्सेंस ऑफ डीड. नेक्स्ट, इंटरेस्ट ऑन पार्टनर्स लोन इज 6% पर एनम. अगर कोई पार्टनर अपनी फर्म को लोन देता है, अगर पार्टनर अपनी फर्म को लोन दे रहा है, इफ पार्टनर गिव्स लोन टू हिज फर्म, देन फर्म पेड 6% per annum interest on loan in absence of deed. If there is a deed, then the particular rate which is decided by firm is paid to partner's loan. But in absence of deed, 6% interest per annum will be paid to partner. So it's a short type question. Okay, so see it again. Number one, partnership deed. Partnership deed is a written agreement contain all the rules and regulation of firm like name, address, business, partner's name, partner's self business, address of firm, etc. etc. Rules applicable in the absence of partnership deed. It's more important question. The rules applicable in absence of partnership deed. Which type of rule will be applicable in the absence of partnership deed? Number one, P and L are to be shared equally. No interest on capital shall be allowed to partners. No interest on drawing to be charged from partners. No partner is entitled for remuneration. अगर कोई partner काम भी कर रहा है तो उसे कोई remuneration, salary, वैल्यू कुछ भी नहीं मिलेगी in absence of deed. And interest on partner's loan is 6% per annum gives by firm to his partner in absence of deed. Now next we move on. Our first numerical topic of this chapter is P&L appropriation account. P&L appropriation account is the most important topic of this chapter. P&L appropriation account is the most important topic of this chapter. You have to learn it's most important. What the mean of P&L appropriation? Before learn it, we go to back 11th class. In 11th class we learned that every organization, business organization, but maybe sole proprietor or any other type of business organization, prepare final account at the end of year. Every partnership firm, every sole proprietorship firm, anyone prepare final account at the end of year. Final account prepared at the end of year, which contain P&L appropriation account, trading account, trading account, P&L account, and balance sheet. These accounts are maintained at the end of year by any organization. Can be sole proprietor, can be uh, partnership firm. But in case of sole proprietorship, there is no division of profit because there is a sole proprietor and the amount of profit directly transferred to his capital account. But in case of partnership firm, it is necessary to divide profit among partners at the end of year. See it again. Normally, every organization prepare final account at the end of year which contain trading account, P&L account, and balance sheet. And we learned this topic in 11th class. But in case of sole proprietor, there is no division of profit because sole proprietor directly transfer the amount of profit in his capital account directly. But in case of partnership firm, because there are more than owner, two proprietor, then how to be divided profit between partners? For distribution of profit, For distribution of profit among partners, we will prepare a special account which is known as P&L appropriation account. P&L appropriation account is a special kind of account. It is a special account which is prepared at the end of year for distribution of net profit among partners. It is a special account which is prepared at the end of year for the distribution of net profit among partners. It is a nominal nature account. Yes, it's just like P&L account. P&L account and P&L appropriation account both are same type of account. Difference between P&L appropriation and P&L is only that P&L account is maintained in case of sole proprietor or partnership firm. P&L account is made for calculation of net profit. But if you want to distribute the net profit among partners, then you have to maintain a different kind of account that is known as P&L appropriation account. And balance of this account, balance of this, like balance of P&L account known as net profit or net loss, whatever. But the balance of P&L appropriation account is known as divisible profit. Balance of P&L appropriation account is known as divisible profit, which distributes among the partner, which is distribute among the partners. Balance of P&L appropriation account known as divisible profit. It's an important question, that balance of P&L appropriation account known as balance of P&L appropriation account known as divisible profit, which is distribute among partners at the end of year. Again, P&L appropriation account is a special account which is prepared at the end of year, for distribution of net profit among partners. It's a nominal nature of account, and balance of this particular account known as divisible profit, which is distributed among partners at the end of year in their profit sharing ratio. P&L account must be maintained by all kind of business organization, but partnership firm maintain P&L appropriation account also after P&L. First we will prepare trading account, then trade P&L account, and after P&L we will made P&L appropriation account. After P&L first, then P&L appropriation, because P&L appropriation account can calculate only net profit or net loss, whatever. But how to be distribute it among partners? For distribution of profit, we will prepare P&L appropriation account after P&L account. Now, accounting system of how to be prepared it. Balance of P&L account, that is net profit or net loss. Balance of P&L account, first of all, transfer to P&L appropriation account. Profit transfer to credit side and loss transfer to debit side. If net profit, then net profit transfer to P&L appropriation credit side. If loss, then loss transfer to P&L appropriation debit side. Again, profit of P&L account. Profit of P&L account direct transfer to P&L appropriation credit side by net profit, and loss transfer to DR side to net loss. In case of loss, the total loss directly distributed into partners capital account. The total loss of net profit directly distributed to partners capital account. Loss transfer to partners capital account. Profit or loss, both are transferred to partners capital account. But in case of loss, no interest on capital, no salary, no remuneration, nothing is to be paid to partners. Because if a firm having loss, then how can he pay salary or interest on capital to his partner? A salary to employee, interest on bank loan is must. These are charged on profit item. But salary to partners, interest on partner capital is allowed in case of net profit. If we earn profit, then pay to our partners. If we earn loss, then how can we will pay to partners? Then if a firm earn loss, then net loss directly transferred to partners capital account. if a firm earn profit, net profit, then firm pays salary, interest on capital, commission, etc., etc., according to partnership deed. If a firm have net profit, then firm pay salary to his partner, interest on capital to his partner, commission to his partner. All amount will be paid to partner in case of net profit. If loss earned, then nothing is allowed. In case of profit, firm allowed salary, interest on capital, etc., etc., according to your given numerical problem. Now, like P&L account, all expenses are debited, same like partner salary, partner interest on capital, partner commission, only partner salary, employee salary, partner salary, partner interest on capital, partner's commission, amount related to partners, not related to employee and third party. Amount related to partner like partner salary, partner interest on capital, partner commission, partner bonus, interest on drawing, all these items are transferred to P&L appropriation account. So in case of loss directly transfer to partner's capital account, or in case of profit, firm will pay salary to his partner, interest on capital to his partner, commission to his partner, and if any partner withdraw amount from firm as a drawing, then he pay interest on drawing and interest on drawing as a income and income transfer to P&L appropriation credit side. Expenses transfer to DR side, then profit transfer to CR side. Same as like P&L account. If a partner draw amount, then interest on drawing is the income of firm and income transfer to credit side. Salary expense debit, interest on capital firm expense debit, commission is firm expense debit, interest on drawing is firm's income, then it will be credited to P&L appropriation account. Reserve, if a firm want to make some reserve for self, if a firm want to make some reserve for self, then amount of reserve will be transferred to a particular reserve account to reserve, and after that we will find balance of P&L appropriation account and balance transfer to partners capital account as a divisible profit. The balance of P&L appropriation account known as divisible profit, and divisible profit directly transferred to partners capital account. Okay. In next video, we will learn how to calculate interest on capital and interest on drawing. In next video, we will learn how to calculate interest on capital and interest on drawing. Okay. Thank you, class.